Hi, you might have noticed Avalanche is going up recently, more than 10% in the last 24 hours, currently at $94.98. Avalanche with ticker symbol AVAX is at market rank 12 with a market cap of more than 23 billion. Now, does it make sense to jump on this recent rally over here? Is the correction over? That's the question of this video. And as usual, we will look at technical analysis. And it looks like the TA done on this channel with backtested technical indicators, with looking at on-chain data, it does seem to work somewhat. We have been able to call the top of the recent rally pretty well. And I don't say this to necessarily brag, but simply to point out what was interesting at this time. So this was at 31 US dollars. And what caught my attention at that time was the heightened trading volume. And whenever trading volume is high on a particular crypto asset, it means that the attention is very high. And so you have heightened prices. Once attention goes down, trading volume goes down, the prices also tend to decline. You see this very often. And so you always want to be cautious when we are at historically high trading volume, because oftentimes these trading volumes, they can't be sustained. And so with the current recent rally over here, we don't have that much trading volume, at least for now. The trading volume is pretty much balanced now. We are not particularly low, we are not particularly high. There's no real signal that we can get out of the trading volume right now for AVAX. Now, one thing that we can look at that might be a good data point is the total value locked on DeFi Llama for AVAX. So that's going up. That's very nice, right? And if you look at the applications that are involved with this, we've got the DeFi protocol Aave, and then afterwards the most popular decentralized exchange, which is Trader Joe. Now on Trader Joe, what's actually being traded? It's obviously AVAX, right? It's also Magic Internet Money. So that's a stable coin. USDC and USDT is a stable coin as well. And afterwards comes already Time Wonderland. And Time Wonderland is an Olympus DAO fork. It's a very, very risky project. It has been growing quite a bit, but the price in the last 7 days went down by 26%. That's more than you get from staking the Time token, right? The Time token gives you, if you optimize this right with staking and minting, maybe around 15% every 7 days. So you can achieve maybe 11 or 12% if you do the minting and staking right every 5 days. So you've definitely lost money on Time recently. And the reason for that is very likely simply the overall market going down. Not so much Ethereum, but definitely Bitcoin. Bitcoin has been bleeding massively. And so when all of crypto goes down, simply due to correlation, people tend to reduce their risk exposure and simply sell off anything independent of the underlying project. And so even though we can see adoption for AVAX going up, the AVAX price did not reflect that. So it really makes sense to always keep a very, very close eye to whatever Bitcoin and Ethereum is doing. And if you look at Ethereum right now, I think these two trend lines, you can draw, of course, quite a few of them, right? But I think these are the most obvious ones that describe the current state. They don't show the best risk versus potential reward, right? So, of course, these are imaginary lines, right? They can be broken. Nobody knows what will happen for sure. But my impression is that in case we drop again to these levels of like 2,200, not saying it will, right? But in case it does, I feel a lot of people have these prices as a reference point and see this as a relatively cheap entry point. That's not necessarily the case right now. We are still pretty high to the all-time high. And even if we do reach a new all-time high, right? This was an all-time high in November 7th. We went up 14% compared to the last all-time high in May of this year. Even though we reached that, we didn't see another rally, right? We didn't see a price discovery rally, something that we saw before whenever we reached an all-time high. We shot up afterwards. Nowadays, all-time highs are more used as profit-taking opportunities. And we saw this also multiple times in Bitcoin. We saw a new all-time high, we got profit-taking. New all-time high, profit-taking. All-time high, profit-taking. So several times we get new all-time highs, and each time the price tends to consolidate. There's no real excitement around an all-time high anymore. And so we get these sideways trading ranges. And in Ethereum, it's a slightly positive trend, but there's no real driver for this to go parabolic from here. At least that's my impression at this very moment. What's also interesting to look at is the 23 and the 39-day moving average. So when you backtest a strategy, there's a separate video on this channel. When you backtest the 23 and the 39-day moving average, as in you buy whenever the price is above those moving averages and you sell whenever the price is below. When you have that strategy and you try to find out what moving average gives the best trading signals, you find out these two are the best, 39 and 23. And so now we are in this somewhat short-term trading range, right? And we get this random noise. We get a lot of buying and selling signals. It's not really obvious that once we go through those moving averages, we have positive momentum. We're simply just consolidating. And so usually I would see this as a potentially positive sign, right? When we break through this 23-day moving average. But this time, I think it does make sense to be cautious. The overall picture doesn't look that bullish. The breakout isn't that clear either, right? It's just a very, very slow crossing in an overall sideways trading range. It's not like we have come down massively and then consolidate and then break through this by having several positive days in a row. This looks very different to me. And of course, I don't have a crystal ball, right? I'm simply just describing here my opinion. What I personally do, I am currently risk off. I've got a lot of my crypto currently simply staked in stable coins, on curve finance, for example, to get a little bit of a yield, relatively safe yield, right? It's only like 7 or 8% per annum, but it's on an application that's got a lot of track record, that's pretty safe, that's audited. So I feel comfortable being in stables right now, and I don't feel comfortable being completely risk on. And given that during bearish momentum, AVAX tends to decline more than, for example, Bitcoin is, given that fact that altcoins are more or less a leveraged version of Bitcoin or Ethereum. Given those reasons, I would not be in AVAX right now. I would still wait until the picture is clearly bullish again for Bitcoin and Ethereum, which is currently not the case. Now, I don't just want to leave you with that. I also want to show you the relative performance to all kinds of altcoins. So this is now AVAX divided by Ethereum, the relative price of Avalanche versus Ethereum. An interesting sideways trading range, right? Sometimes AVAX is expensive, sometimes AVAX is cheap relative to Ethereum. Currently, we tend to be more or less expensive, right? 44% potential versus 85% risk. Not saying we have to go down here, but simply, right, crypto is a game of odds. You're playing risk versus reward. Currently, the reward versus the risk doesn't look too great versus Ethereum. Now, here's AVAX versus Solana. Not really a clear picture over here, a sideways trading range. We are neither cheap nor expensive. This is AVAX versus Cardano, and the same holds true over here. AVAX did underperform Cardano for quite a while, and then Cardano is now heading to $1. Mark my words, I do think we will see Cardano at $1 at some point in time. And so AVAX is clearly outperforming, but again, not historically cheap at all. This is AVAX versus Polkadot, almost at an all-time high. And note how these charts, they all look like long-term sideways trading ranges, right? A lot of those charts, they are not trend charts. These competing blockchains, they tend to rise and fall in tandem, but there also seems to be shifts within the ecosystem where one alt is rallying versus another one. So these charts, they look very different to, say, the US dollar chart, right? Where you have clear trends, we have clear breakouts. You don't have these sideways trading ranges that you see in these other relative valuation charts. So this is AVAX versus DOT, close to the all-time high. And then last but not least, and I think that's probably the scariest of the charts, that's AVAX versus Phantom. So AVAX is underperforming Phantom over the long term, which kind of does make sense because Phantom did get quite a bit of adoption and Phantom is smaller than Avalanche. And so being the smaller coin that gets adoption, it tends to outgrow, right? The smaller you are, the more you can potentially grow. But this is a trend over here, right? Not saying that we will definitely come down from here. But simply again, risk versus reward, I don't think it looks too attractive. AVAX definitely looks expensive versus a lot of competing coins. And this might have underlying fundamental reasons. The value lock chart does look interesting, but when you already look at the second largest application, which is Trader Joe, most of that trading volume is simply AVAX versus stablecoins, right? These are all stablecoins. And the first real use case is here Time Wonderland, which is incredibly risky. So it doesn't have to be that this total value locked will go up into infinity. If the momentum around Time Wonderland goes down, this could turn around as well. So I'm only saying there's a lot of risk currently baked into the Avalanche price. And if you've got a fundamental conviction for holding this over the long term, and if you don't mind these pronounced drops, right? If you simply buy this, hold this and forget about it and sell it maybe in 4 or 5 years, then by all means, this might be cheap. But if you're somewhat actively trading, if you try to time the market in altcoins like I do, I still think $95, $96 for AVAX is pretty expensive. I don't buy it right now, and that's because of the general crypto market, and that's also because of AVAX relative to other layer ones is comparatively highly priced. Now, I know bearish outlooks do get a lot of negative comments. A lot of people are emotionally attached to their investments, and so they defend it wherever they can. If you enjoy a YouTube channel that doesn't just hype things up, that looks at things objectively, feel free to give this a thumbs up. YouTube will then help to grow the channel. If you haven't yet checked it out, we've also got a premium membership. You can find that at thebitcoinstrategy.com. It's got a private Telegram group where you can ask me any questions. It's also got daily market updates, so you can react quickly in case things turn around. Last but not least, feel free to subscribe and especially hitting notifications, because obviously these analyses, they are time sensitive. You don't want to watch them, say, 1 or 2 weeks after they've been published. So the notifications are something you might consider. Last but not least, we've got a public Telegram channel, the Bitcoin Strategy channel. You can find us simply by searching for Bitcoin Strategy channel within the Telegram app or by clicking the link in the video description. We are more than 1,000 people there right now. See you next time. Bye-bye.